There's no complaints over this way. It's actually quite chilly for Florida, so it was a brisk morning I woke up to. Wasn't expecting that, but can't complain with that. It's nice to have a change every now and then here in this Florida climate.
Yeah, you can see I'm back in the Dragon capsule here in Florida as well. And yesterday morning started off great, and then a little bit of rain and cool and wind today. So I could have stayed in the mountains and dealt with that. But let's get to the important stuff with the market. You can see that we're having a tick up today. So far, the key is the 10-day moving average. As you know, we did manage to barely close above it yesterday. And then a little bit of a move to the upside. We were talking about that during yesterday's live Evo Trader show. And if you're not familiar, if you're a subscriber at evotrader.com, not only do you get the Thursday night insiders meeting with an extended Q&A that Zach was talking about, we have a brief update to start the week on Mondays as well. So we talked to you twice during the week there, in addition to TradeFinder. So I'm a little surprised by the move to the upside with the economic data that's come out. I don't know that anticipating a less hawkish Fed tomorrow is going to be the correct move, but hey, the market's always right, so we'll see what's going on. I do want to highlight, we talked about this last week, or at least Thursday night. We have a little bit of a potential rounded top type of scenario here, which is just one of those general rules that when the market ends, it oftentimes kind of rolls over before we start a corrective move. But hey, if Chairman Powell comes out and he's not hawkish based on the news, in fact, starts talking about rate cuts again, we're down to, I believe, just below 50% now for a rate cut in June, about 50% for a rate cut in July. So I don't know. I guess maybe moving it out a month isn't bothering the market too much. We will see if the market can handle this rally into the close. As you can see, even though we did trade higher throughout most of the day yesterday, we did close on the low. And it wouldn't shock me if that repeats again today. But for now, we're trading at the high of the day. And we'll see if we can at least close above the 10-day moving average by the end of the day. That's going to be the key. One of the things that's bolstering the market today, I believe, interest rates, as we talk about so often here, we've been wondering, will this wave 4 get taken out on rates? Yesterday, it looked like it was threatening to do so. You can see the 4 didn't move over. So we did not have a higher high on the 10-year yesterday, but got awfully close. And rates are ticking down just a little bit right now. Again, kind of surprising me. You can see that with this vertical move, we got just a little bit overbought, and that may be all that's going on. It may not be any sort of anticipation of what the Fed may see or say tomorrow. It may just be that, hey, we're correcting and consolidating a bit of an overbought run there in rates when the economic data started to show a few chinks in the armor. Along with that PPI report we've talked about so much, talking about how wholesale prices are still showing inflation where the consumer price level is not, squeezing margins, etc. But so far today, things look pretty good moving to the upside. But it's early in the trading day. Well, not early, but we still have a couple hours here before the close, and we'll see if we can finish that. The dollar is a bit firmer today, which I find interesting, that the dollar is a little firmer, but interest rates are down a little bit. We could just be in this trading range that we talked about. We broke 104 that we'd been in for quite some time in the dollar. Now we're down to 103, and that was a little bit of support. And maybe we're just going to be a little range bound here in the dollar. If we take a look at the VIX, you can see that, yeah, as you would expect, ticking down a bit on the VIX. We still have this lower trend line in place. However, we seem to be just inching higher in these higher lows here. Nothing too significant. It's just kind of a channel. I have expected, and you've heard me say it numerous times, a bit more volatility this year. I think that continues to play out throughout the rest of this year, whether or not we finally get to rate cuts and it's a buy the rumor, sell the news, etc. We'll see how that plays out. But for now, we're maintaining a pretty nice looking channel there. Pardon me, to the upside. The one thing that we've been talking about that had been performing so well for quite some time that's not doing so well recently here is Bitcoin.
Can you hear me?
Did, did you want to say
Yeah,
something,
sorry.
Zach?
Yeah, we lost the chart. It kind of froze up. So if you don't mind just sharing the software there.
Okay. Shift refresh.
Apologies. Good old
So
technology.
you definitely don't want to look at me. So here's the chart back again. Is that better?
That's better. Yep.
Back with the chart. What part did you lose me at? Do I need to go back on the VIX?
Yeah, well, it was frozen for a bit of time. Didn't lose the audio, just lost the visual. It was on the SPY.
Back on the SPY?
But you'll need to go to the VIX, yeah.
Okay. Well, this has nothing to do with the mountain internet because in Florida we have a strong internet. So I'm not sure what happened there, but maybe we're streaming to way too many platforms. I don't know, but we do want to cover everybody. All right, so that was the commentary on the S&P, the VIX or the TNX a little bit lower. This is a recap. Dollar a bit firmer here, perhaps in this trading range, moving between 103 and 104. And then here's the VIX that is down today, but maintaining that lower trend line of slightly higher lows. And then when you connect the highs, you can see it's just a beautiful channel to the upside. And that's kind of what I've been expecting as far as the turn back to the upside from a volatility standpoint. So moving higher here, I think we're going to have a more volatile rest of the year. And what I was saying is that regardless of whether or not we cut rates in June, July, or whenever the rate cuts come, could it be a buy the rumor, sell the news thing on the rate cuts? And then that's where the volatility kicks in. Perhaps the market's just looking ahead. I'm just kind of surprised that we're up the way we are this morning with such a big Fed announcement tomorrow. It's going to be one of the more watched Fed announcements that we've had in recent times. So moving ever so slightly, crawling to the upside on volatility, I guess would be the best way to view it. And then what I was going to talk about is Bitcoin is taking a bit of a breather here. It's kind of hanging around the 65,000 range, so it's a little bit lower than where we are right there. As the live quote, we will have the live software out soon. As we've talked about numerous times, it's in beta form. If you haven't gone and gotten a copy, go to hub.com and you can get a free beta copy, nothing to download onto your computer. It's all web based. And we will be able to have live Bitcoin at that point in time rather than these end of day quotes. But we're around 65,000 on Bitcoin at the time we started this recording. So just a little bit lower than where that bar shows you. But as long as we stay above this 64,000 range, I think it's just kind of retracing a little bit of an overbought condition. We do have a little more support at 60,000 if we can't hold 65. We had traded below it overnight, but got back above there. I think we made it all the way down to like 62 last night, but back to the 65,000 range now. You don't want to see it give all this move back. It can give the vertical part back, but you don't want to see it give it all back. And that would be a bit of a surprise. But the market likes to surprise us with the halving coming up on April 18th. And so, just the market moves in impulses and corrections, and Bitcoin's not immune to that either. So that could be what's going on here with Bitcoin, just a normal, ordinary pullback as we get ready for that last big run. It's gotten a little bit higher, I think, than most people. Most of the crypto experts that I talked to saw these kind of highs around the halving, not this far in front of it. So it could be just a little bit move of a move in front of it. And if you're not familiar with what that means, basically they're going to cut the amount of Bitcoin in half, which is going to restrict supply. And normally you think, okay, supply demand, you have less supply, that creates more demand. But with all these ETFs that we have in Bitcoin, are they all going to be able to acquire enough Bitcoin? That's where the big question is going to be with the halving coming up. Because in the past, when we ran into the halvings, we didn't have this concern about Bitcoin ETFs, et cetera, out there. Getting a little bit of pullback in Ethereum too. I thought just for you, Zach, I'd go ahead and show that chart as well. It's been
I do
performing pretty
appreciate
well.
that
Yeah,
for you on
it's all
Bitcoin afterwards.
to some pullbacks, as you can see here. Again, the whole thing we talk about over and over and over again, vertical moves get retraced. Even Ethereum is not immune to that. We are well below the 10-day moving average, however, pardon me, which I think is a little bit of a concern. But we have been outperforming as expected. Ethereum outperforming Bitcoin, even with the strength of Bitcoin's move. As you can see, this is a little bit more vertical. And so you would expect perhaps a little bit stronger correction here. But I do think it catches itself, because now we're in an area with Ethereum that we're waiting on the approval for the Ethereum ETFs, just like we were with Bitcoin. A lot of people think that that's why Bitcoin ran a little bit more into the halving a little bit earlier than normal, is because of the fact that we had the regulatory approval for Bitcoin ETFs. So perhaps it's the exact same scenario here with Ethereum. All right, taking a look at some of our other markets to see how they're performing today. We look at the DIA, and you can see that it's still just kind of meandering along. It's up today with the rest of the market. And the key here is going to be, and I just talked about this in the S&P, where do we close? Do we close on the lows again like we did yesterday? Or can we hold this break above 390? 390 has been the area. It was resistance back in February. We've been trading back and through it throughout the early part of March here. And we have not been able to have a follow-through day. Every time we've closed above 390, we've given it back the very next day. And that's why that's another one of the rules we talk about here all the time. You have to have a follow-through or confirmation day. So far, we haven't been able to achieve that. Now, if we can close above 390 today, and Chairman Powell doesn't come out with any sort of unexpected hawkishness, that could give us enough to give that follow-through or confirmation day, and maybe the Dow can take off and do something, because it really hasn't done a whole heck of a lot since we had that run at the end of the year. Yeah, we did move up a little bit between 380 and 390, but that's not much a move considering it's been over 2 months in length that we've been doing this. So we had resistance underneath 380, we broke above it. Now the resistance is at 390. So the question is, over today and tomorrow, can we close above it with a follow-through day? And that would become quite interesting, I think. It would also make you wonder, well, will the big tech stocks still be able to move in that kind of an environment, or is it going to be more rotation like we saw back at the end of the year, where there's concerns about the economy, et cetera, the Fed being late to the party, which I've always thought they would be on these rate cuts, and maybe the Dow's the place to be. And we'll see how that plays out. And then the Qs, you would expect that the Qs would be having a little bit better day today, with rates just ticking down slightly, but not so much. So far, NVIDIA had their big conference yesterday. They announced a new chip, but that was after hours, and we were down a little bit. We've had an early rally in NVIDIA today. It's given a little bit of it back just here in the last 15 or 20 minutes, but not a whole lot. I'll go ahead and show you the chart of NVIDIA as well, because I'm sure somebody's going to ask about it anyway. But at least sitting right here at the 10-day moving average, and we are well off the lows of the day from today on the Qs. But still that wave 5 stubbornly will not relabel. That could change tomorrow. As I said, if Powell's comments are viewed as not really hawkish, I don't think he's going to be dovish, but if they take the hawkishness off the table, maybe that's enough to tick rates back down a bit as we look for rate cuts whenever they may be. And maybe we get a bid back here in the Qs. But for now, the wave 5 is not the key. It's can we get back above 440? And then we'll worry about whether or not we take out that wave 5 and if there's a relabeling back to a 3. That's not the current question. And as we do these, all we can do is talk about the information that we have at the time. And right now, we're just back testing that 440 level to see if we can break above it. Maybe the Qs wait until tomorrow on whether or not Powell is hawkish, etc. And then the IWM, which as we talked about last week, did finally manage to go up and hit that 210 level. It got turned back once it hit it, but we do seem to be back in that trading range between 190 and 210. You can see there's the move back to the downside. As I talked about, we did come up and hit 210. That's the level. If you're newer watching, welcome. Happy to have you. 190 to 210 was the range going back over a year or so. Then we dropped down to 170 to 190, and we managed to get back above 190 in December. We tested it in January. We finally made the move up to the resistance level at 210 back here on the 8th of March, and we've turned back, open on the low, trading higher so far today. So kind of status quo with the market. The rest of the markets, even though we often talk about how the IWM marches to the beat of its own drummer, but look at the size of this zigzag here. I want to point that out. Just an absolute classic zigzag within the wave 3. For those of you not as familiar with Elliott wave rules, every single impulse pattern, 5-wave pattern, starts with a zigzag. And one of the reasons, not the main reason though, I like trading zigzags within wave 3s. It's my favorite directional pattern, but it is part of Elliott wave rules that every time you start an impulse pattern, it starts with a zigzag. We call this a 38.2% wave 4 correction, and that means the 61.8% level is the target, which would be a break of 210 if we were able to move up there. That's getting up towards 215. That's when we would start wondering is that a new range starting? Because the IWM likes to move in these 20-point ranges. So if somehow 210 were to become support, then we would be looking at resistance up at 230. But that's way ahead of the game. We're nowhere near there yet. We got to turn around and get back up to 210 first. But if the market does rally into the rate cuts, then that's something that we could keep an eye on moving a few weeks down the road. Also in a wave 5 here, but again, I don't hold that in the same vein as that I hold the Qs with their normal coinciding with the S&P and the Dow. Just as classic as you could expect on the IWM. If you watch the small caps, this is what it does. It stays in these trading ranges, and we just have the only question of it. Does it stay between 190 and 210, or can we create a new trading range between 210 and 230? That's what we'll be watching about moving forward. Some of the international markets that people like to look at, we got to bring up the EWG because of the unbelievable move that Germany had. It's even kind of taking a little bit of a pause, which you could argue is very warranted. Following it, had this consolidation here and then just rocketed up to those highs back on the 13th of March and then back down now towards 31. We have a little bit of support here. It's not fantastic, but it's a little bit. And we have kind of a small descending triangle here. Triangles can break either direction. I don't think I need to go over that again. We've covered that in ad nauseum multiple times, regardless of the stuff you read on the internet. All triangles can break in either direction. So this could even break to the upside, even though it's a descending triangle. We have allowed the 10-day moving average to catch up, and it's curled sideways. So we've basically been tapping the 10-day moving average on the lows. I've been kind of with a little bit of humor saying I have no idea what's going on in Germany, but that run was pretty darn impressive. We did have a bit of a pullback, as discussed in the U.S. market update over the weekend in the INDA, and that continues. And now we're looking at a break of the 50-day moving average, which means that could have been the end of that wave 5. We wanted to see if we could hold the 50-day moving average. You can see we did for 4 days, and now it's breaking below it. And if that means that wave 5 is indeed complete, we're coming down at least to 49 here, and perhaps just a touch lower than that in order to go back to the previous 4. For Elliott wave newbies, when you have a wave 5 that extends less than 100%, when the wave 5 ends, you correct back to the previous 4. It's like clockwork. However, if the wave 5 extends more than 100%, you only look for a 61.8% fib level correction. Well, in this case, obviously that wave 5 is not above 100%. So we could be looking at some sort of a pullback here towards the wave 4. But you would argue that if our market turns to the upside, once again, depending on what Powell says tomorrow afternoon, and that's after 2 p.m. Eastern time, when they have their rate decision, nobody expects anything. There's a 99% chance in the Fed fund futures that they don't do anything with rates. That's not what's going to be watched. What's going to be watched is what is the commentary. Are they concerned about the PPI report? Do they view it as an outlier and they kind of brush it off? We've seen some weaker economic data, except in the housing market. And, well, not the housing market, but in the jobs market, it seems to be staying stubbornly strong. The jobless claims on Friday were a bit lower than expected. So the labor market, although has cooled off some, it's amazing how the jobless number doesn't match up with what you read, because if you read on the financial networks, there's people that have been laid off and are struggling to find jobs where that wasn't the case before. Initially, if they lost a job, they were easily able to find one. I do think some of this plays into the fact that people are conditioned, they like working at home, and most of the companies are saying, no, we want you back in the office. We feel you're more productive there. So that could be playing into it as well, and it's just personal viewpoints on the fact that they can't find a job. Can they not find another job, or can they not find another job that allows them to work at home like they've been doing? I think that's a question worth considering. So a little bit of a move down here in the INDA from the international side. All right, if we go back and look at some of our previous case studies here on TradeFinder, as you know, at TradeFinder, we look for case study ideas and then you're kind of left on your own. We did have RGEN that we looked at back on the 6th of February. That's the oldest one that would be considered still in play because it's just gone dead sideways. And the same commentary as we've had over the last couple of weeks here on TradeFinder. As long as it stays above that wave 3 high, I think you can stay long RGN. We are building that launchpad effect. It doesn't have to break to the upside, but normally when you have this kind of consolidation, you get some sort of a significant move. It can break to the downside as well. We do have a little bit of a descending triangle here, so I think RGEN is going to make some sort of a move here in the not too distant future. I'm not sure we're going to have to wait much longer. If it breaks up, great. If it breaks to the downside, then we just close that one out and move on and look elsewhere. And speaking of looking elsewhere, if we take a look at LND or LIN, you can see that we've had this big vertical move to the upside. We looked at that one back on the 6th, and since then it moved even higher. 480 was our target, and we did close that level off at 480. And I want to show a chart. Let's see if I can go ahead and give you a new chart here. Something that I think you're going to find really cool is the chart on our new platform that we've been talking about. And here's the chart. It's over at Hub. I just talked to you about going and getting the software there. There's so many cool ideas. Not only are we going to have live Elliott Wave, etc. Are you able to see that? Is that showing up?
No, I'm not seeing it.
How about now?
Got it.
Okay. So one of the really cool features of the new software, and this is the beta form, is we are posting the TradeFinder ideas here. And so I just wanted to show you, if you come down here and look at the bottom, we posted that, hey, we closed it. We did take a gain here, and it gives you little metals here, and everyone has it. So it's a social platform where you can post your own ideas on the software. It's a really cool feature. So we got live LA Wave, we're going to have live crypto, we got all the great charting features, everything that we've been talking about, but we have this social media aspect here. And so you can follow along. You can post your own ideas and people vote on it. So the people that are watching it can vote and say, hey, we agree with you or we don't agree with you, and post your own commentary. But I wanted to show you there proof that we did close this one out. So if you're still in this one, you might have missed the actual top. It is, I think, moving back to the upside today. But it gives you an idea here what we can look at, so that we have backup here when we say, hey, you should have taken the gain there. So we're closing LIN off. That's the one that we thought would move to 480. It got to 478. That's pretty darn close. So we're taking that one and moving that off. And then the other ideas that are posted here, you can see these are the closed ideas. So you can go back to my ideas, and this is for TradeFinder. So it's got its own indication here. You can have your own personal ideas. These are the TradeFinder ones. You can look at MOH. That was the one that we looked at last week. So here, just proof in the pudding here of what we're doing at TradeFinder. RGEN is still in place there. It's currently down 2.3%. So that's why I'm saying no big concern there as long as it stays above the wave 3 high. And then look at MOH. We're already up 3% here. It's up nicely today. We may very well post the close of that one today. So just some really cool things that I wanted to show you there that are in this software. So if you haven't gone to hub.com and registered for the beta version, go ahead and do that. You're missing out on some really cool things if you don't go through and do that. So now we'll get back over here to the regular charts. And LIN, as I said, is having a move to the upside today. MOH is having a move to the upside today. Here's MOH. We're done with LIN. And that's why, again, this is the power of that. We closed this off up here when it got almost to our target. The high was 477. And now look what's happened since then. So if you missed that move, then you're still in it. When we've already posted the close to it. And then MOH, there's that move to the upside today that I was talking about. We have 420, but we're awfully close to that one as well. So we probably are going to take that off and post that as a closing idea today as well. So there's so many features there. Get yourself a copy of it, start playing with it, get used to it, get involved. If you have your own ideas, see what other people think of your ideas. It's really cool. It's a nice feature that I wanted to share with you in this TradeFinder. So slightly different than our alert service at evotrader.com, where we send you out alerts for any entries, adjustments, or closes. But it's also cool to hear what other people think of your own ideas on the software. So again, hub.com, you can register for the free beta version there. But MOH was the one from last week. And actually 430 was the target, but we've had a pretty nice move since then. If we went back and look at the 12th, so we're back down in here, and you can see that that's been a pretty nice move to the upside. So we'll watch this one into the close, getting in front of the Fed meeting tomorrow. Even though it hasn't quite hit the target, we may go ahead and take the gain on that one. And that only leaves us RGEN on our TradeFinder case study ideas. So lots of cool stuff to talk about. So let's see if we can find something for today as far as a new case study consideration, which will also be posted there in the TradeFinder side of it. On the software, we have 4 results to look at today. AFLAC, which is any of the insurance things, are interesting to me right now. Just due to the fact that if we do have a little bit of a rollover in the economy, that's going to be a defensive sector. That's where things are going to look to go. Rollins, which I believe is a defense contractor, that's also interesting. Let's take a look at these two and see what those charts look like, and if there might be anything here that we can take a look at. See, that looks pretty interesting here. We might not have to go far. It is in a wave 5 that's right in the tap box, so it's right in that projection level, so that's a concern. We'll need to examine this DMI here to see what the likelihood is of it going higher, and that's pretty strong. We have a zigzag. It's not in a wave 3, but the zigzag is in the wave 5, and that works just as well. So we'll see here. Yeah, look how we're just mirroring. I talk about this a lot in the world of Elliott wave. When you have more than one Elliott wave pattern that are giving you roughly the same type of results, that just gives you more confidence. It increases the probabilities that it's going to occur. So notice how the fib levels are just right there mirroring that tap box target. So when we get here, that's done what it's supposed to do. What's the likelihood that we could continue higher? That's where the DMI comes in. And we have all the education about these indicators that we look at on our website at evotrader.com as well. So you can learn about these if the DMI is not one you're super familiar with. The ADX is moving up. The positive directional indicator is moving up. So I would say that we have a chance of moving up to 49 here. That's definitely going to be a candidate. But I also want to take a look at AFLAC before we make a decision here on whether or not that's our official case study. AFLAC did gap down. Now we're right back up at resistance. I like the fact that Rollins has broken above resistance where we are not right breaking above it yet. See if I can get you the current quote on AFLAC and see if it looks like we are breaking above it in today's trade. Or if, see, that's going to be the great thing about having the live software is then we'll be able to just watch and see what happened intraday as we move higher. We'll bring up different chart of AFLAC and see, oh, there it goes. So we did just get the fact that it's just kind of sideways today. And I don't think that that's, we need to see it break above this level. So that's not really a consideration, so I'll just close that one off. So we're back to looking at ROL, ATKR. We'll take a look here and see what that one looks like. And well, that's got a nice little zigzag pattern to the upside as well. Let's see if that's in a wave 3. That's also in a wave 5. There's one that's extended more than 100%. So when that wave 5 ends, again, you're not looking for a move all the way back to the previous 4. So just basic Elliott wave education there. Decent volume on this move higher. So you want to see that. And then the DMI is curling up. It almost looks like perhaps it's a little bit earlier in the cycle than we had on Rollins. Let's see what this zigzag looks like, right at the 61.8% level, but we're awfully close to that 100% level, and that could be a little bit of resistance. We would have to re-examine what the DMI looks like once we get there. So we're going to go with Rollins is going to be our official case study consideration for this week's TradeFinder. So for the 19th, we'll look at ROL, and our target is going to be up towards 49. We've already passed the target there at 45, so up to 49 is what we're looking for. That should occur in the not too distant future if it's going to happen. So yeah, that one looks pretty good with the setup with the DMI to continue higher. The only pause here is it has hit that tap box. So just remember, it's done what it's supposed to do on the basic Elliott wave rules. We're looking for extensions now, and we need our confirming indicators to give us an idea of if that extension is going to occur. And I'd say that it looks like it will. Our stop here is another thing that's interesting about this case study consideration is it's not too far away. The stop is going to be here at this previous wave 3, very similar to what we were looking at with RGEN. You can stay long. If we look at the 10-day moving average, we're not really that far overbought. So the official case study consideration, ROL, we will post that in the TradeFinder section. following this broadcast, so you can follow along with it there if you'd like to. So yeah, get to that software and join us as we look at these things each and every week. It's great to have that kind of a community, and find out how you are. People vote on your ideas. Post your own idea. What do people think of it? It's an ego thing, right? You post a good idea and you're right, and people agreed with you. It gains confidence. So many aspects of this new software that we're so excited about. All right, with that, Zach, even with doing all that a few minutes early, it doesn't take us as long to go through these case study considerations when they've been working so well. There's not as many to look at. So we will open it up to some questions here.
Sounds great. Yeah. And I just wanted to say, well said on the platform. I dropped that link in the chat to all the platforms that we're streaming to, and go ahead and sign up. As Rob said, definitely a good time to get in early and take advantage of the features that we are going to be rolling out. A lot of exciting stuff, especially that discussion board. Let's go back to the crypto, just as a quick confirmation. You went over Bitcoin and Ethereum. Bill was just looking for confirmation if it was in a wave 4 yet, I believe, compared to Ethereum. Yet, right?
Correct. Good question, and this is something that I talk about all the time. Remember that this 4 is a projection. If we're in the wave 4, that's where we can expect to find support, and I find that interesting because there is support right there at 52,000. So from just a pure price action, there's support there. I'd hate to see Bitcoin give that entire vertical move back. It might, but if we are in the wave 4, then we probably are coming down to 52,000, and that's where we would look to find support before we run again. Note, though, that the forecasted time for that would be after the halving occurs. So I don't know that that's going to occur, but these are projections. We're still in the wave 3. If the wave 4 were to start, that's where you expect to find support before the continued run higher. But for now, we're still in the wave 3, and we're going to have to break a bit lower, I think, before the software would label that as a potential wave 4. One last comment. You mentioned the discussion boards there on the software. So many people are looking at places, Discord and all these other social media places that people are looking for ideas, and you get craziness on there. I think if you're in a community that has been following us at TradeFinder, and you're becoming a believer in Elliott Wave and zigzags and all the things that we talk about here, you're viewing here, that's a much better place to be because you're in the same community and you don't have, some of the wild pie in the sky stuff that goes back to the meme days. So I think, you're in your own community there. Make it your community. Anyway. And by the way, I don't get anything from talking about the software. I am not compensated for talking about the software. I don't make a dime or a penny I just think it's the greatest thing out there. And I like to share things with you. That's why we do these shows, is to share things that can help make you a better trader. So I just want to be real clear on that. I am not compensated for talking about that software, whether it's the legacy software we see here or the new software. I just think it's great, period. That's the truth. Anyway, let's go for some questions here.
Alrighty, I'm just finishing up a message in the chat there. So I just wanted to go over to a question.
45 things going on at once back there.
Just a few. So question from YouTube, Outlaw Trader. We'd love to look at that chart for you for BRPHF, but that's a OTC, and the legacy software that Rob's currently on does not have that. However, the new hub platform that we've been talking about will. So definitely look out for that, and go sign up again for beta registration if you're interested in getting access to all that down the road. All right, so let's go over.
Do all that stuff in the very near future.
Absolutely. So, question from William here on Tesla.
Well, we looked at Tesla during the live show yesterday, and again, as an alert subscriber at ewotrader.com, you have access to that show, and it held yesterday, the 160 level. If you've been watching, that's ground zero. for Tesla. It is as Zach loves to say, KBD. It abbreviated my Katie bar the door. Uh, if Tesla can't hold 160, I just don't see anything stopping it from going back down to 100. We had talked about last week the potential for some sort of a tradable bounce. We did that in the insiders meeting Thursday night, and you can see that we did get a tradable bounce. But for Tesla to become, I don't want to say relevant because that's not the word, but if it's for some sort of a longer term bullish position, it's got a tough road ahead of it. I just love that pun, but it's got to get back above 180, and then it's got to get back above 200. So it's got some work to do. We've gotten the tradable bounce. They only last a day or two. In other words, what I'm talking about there, it was oversold here when we were looking at it Thursday night. So you can see the separation from the 10-day moving average. 160, as I said, is ground zero. That has to hold. And it said that you might get a tradable bounce back up towards the 10-day moving average. That's been accomplished. So that little tradable bounce move is over. Now you have to wait and watch and see, can it find its way back above 180? And if so, can it get back above 200? Because that's where it needs to get if it's going to have any sort of a significant upside. And it could, because it was such a vertical move down. Just a little greater than a 45-degree angle, but not bad. But coming down here to 200 was rather quick. So if it can get above 200, it could take off and run again. But I would argue that to have a longer term position here, you need it back above 200. Now, if we can get above 180, we could have the same scenario that we just had at 160. You could get a tradable bounce, and then it's going to bump its head against 200. So that's going to be the key longer term. Where's the catalyst from Tesla? Elon's going to have to come up with something really cool. The Cybertruck's out. He's backing off the shippings to China. So I just don't know where something really cool would have to come out. I think Tesla is going to have a hard time getting back above that 200 level. I know that's not what you want to hear, but that's what it looks like to me.
Very well. Well, that's what we're here for, the facts and the facts only. So let's go over to Adobe.
Adobe's a good one that we haven't looked at. Good call on asking about Adobe. They came out and they said the magic words with their AI, and it moved up. But then not so good. That came out from the earnings report. As you can see, we kind of went back the other way following their earnings report. And so some of that anticipation has been given all back. Once again, oversold. So we're seeing a lot of these charts that talk about these general rules that I try to share with you over and over again. The separation from the 10-day moving average matters. You can see there's a big gap down there. We did have a little bit of support here in the 480 area, but we had supported 500, which it gave back. So that means that 500 has to be the next little point of resistance. And then to see where it is now, we are back above 500, but is this just an oversold bounce? Once again, similar to what we just talked about Tesla for the longer term, which very well can happen with Adobe. I feel like there's more of a catalyst for Adobe to get back above this area here. See this channel here between 500 and 540? That's what it's going to fight now. So it did get back above 500. That was key. But once again, an oversold tradable bounce. And now it's going to be in this range where it was for quite some time before they uttered the AI words. And then it's got to break through that. And that may churn it a bit here between 500 and 540. If you can get back above 540, we could be off in a wave 5 run to the upside, because the wave 4 hit exactly at 50%. So that's a good, strong level to bounce from. But yeah, it's too early to say that's what's happening. I think it's just an oversold bounce right now. but a break above 540, and then I think you can be long there. So a lot of these ones that we're looking at now, I think, need to be watch list candidates rather than take action on them. These oversold bounces have happened already. And so watch to see if it can break above resistance and make a meaningful move, not just an oversold bounce.
Very well. Well, last time I tried to pronounce this one, you exposed my youth in this world of options trading. I'm just going to give you the letters here: VALE.
VALE. Well, you said Vale, and it's volley, but
I
it's
still
yeah,
retail.
yeah.
Yeah.
Yeah, so this is in the this is a I believe it's Brazilian, but it's definitely in um, Spanish area, and that's why it's volley. But down here in the 12, it was scary that it broke below. I mean, it had a little bit of support here, just a little higher in 12 and a half, but it couldn't hold that. But it did make a nice doji there at 12. But this one's a much tighter range. But gosh, this is the theme today, Zach, that all these oversold bounce stocks are just making their oversold bounces, but they're in areas where they have more resistance. There's a little bit there at 12 and a half, just like it was a little bit of support. That didn't hold it at all. And then the resistance area for volley, which this one in the sector they're in could do this. It could break it back above 13. And I would watch this one rather closely because if the resistance, the big resistance is in this range between 12 and a half and 13. So if it could get back above 13, I think you might have something going here. But once again, it's had its little oversold bounce, and now we have to see, can it muscle back through? So a lot of these had broken through good support levels, and you know the expression, old support becomes new resistance. So now they have to break back above resistance. You don't want to jump too early. If you caught some of these oversold bounces, great. That's what can occur. But remember, those bounces are 1 to 2 days. That's it. These aren't sustainable until we get back above resistance levels. So another one in that same vein. So pretty interesting show today where all these stocks that people are giving are in very similar patterns.
Alrighty, let's go over to AMD.
Wondering when we were going to get asked about AMD again. So if we take a look at this, I was a little surprising. We did have an alert there, and it got out a touch too soon. But now you look at it and say, no, your exit was pretty good. Didn't get the high, but not always trying to catch the highs and the lows because that's almost impossible to do. But you can see in today we came down and hit the 50-day moving average. We're closing back above 180. That's very important today. So we tested the 50-day moving average. That's fine. But it's got to close back above 180. And then you know the next rule, it has to follow through with that. So we have to have a second day or a confirmation day. But this could be, it got too vertical. Again, the rules. I hope everybody is adding these to their repertoire. What goes vertically up comes vertically back down high percentage of the time, really high percentage of the time. And so that's what happened with AMD. I do think AMD is in a good space. I think they're going to do their best to give NVIDIA a run for their money. And then, it could have a longer term move. But you don't want these vertical things, unless you happen to be long and catch one of those vertical moves, but they don't last. And that's why you don't really want that. So can we hold above 180 into the close today? And can we follow it through tomorrow? And if so, what you'd be rooting for is let's get AMD to, move more on that 45-degree angle that I like. And I think has a high percentage chance. I'd be really surprised unless the market falls apart. I mean, if Powell does come out tomorrow and he is more hawkish than what the market expects, and that could really hurt the tech sector quite a bit. Rates could jump, and that could be the catalyst that breaks it below 180. So we do have to keep an eye on that tomorrow. But if we can close above 180 today and get the follow-through day tomorrow, even with Chairman Powell's comments, yeah, you could have something in AMD. So I would clearly keep an eye on this one. But yeah, tomorrow's close, very important as to where the future goes on AMD. But a break below 180 and you gotta bail. That's your stop.
Very well. And so we just had a nice comment come in from Thompson saying the new hub charting software is wonderful. So we appreciate you taking the time to share that positive feedback. And
Yeah,
we have a
awesome.
hand up as
Thanks.
well. Absolutely. We have a hand up as well for a voice question. However, we don't have time for voice questions in this session. We'd love to hear your voice, but we just only have so much time again for this 1 hour that Rob has generously allotted us for free of his time. So we're going to finish up with a few symbols here. First one will be D-Dog, Data Dog.
Data Dog, another one we haven't looked at in a while. Gosh, that one was a commonly asked about one not too long ago, but you can see why it kind of hasn't had the type of momentum run that some of the others have. And so this one looks, it's barely big enough to look. I'm going to see where the ADX is here, if it's low enough for a strangle. No, no strangle candidate here, but it does have a descending triangle. 120, you can clearly see, is support resistance. If it can hold 110 or 120, it does have even more down here at 110. So here's the corridor here on this one. You need it to stay in 110, 120. If it were to break to the downside out of that triangle, it needs to hold 110. Because if it doesn't hold 110, now it's in danger of coming all the way down to 80 to fill that gap. So you want it to hold 120 here if you're long. If you're looking for a short candidate, if it breaks 110, you got a really nice short candidate there. But I wouldn't short it on a break below 120 either, because 110 could easily hold as support. For a long, you wanted to hold 120 and break higher. If it breaks below 120, then be a little more patient, see what happens with 110. And then once again, if it does come down to 110, you don't jump in yet. You got to let it get back above 120. But if you're long it now and it breaks down, you can ride it if you're willing to accept the move down to 110. Noting that that'd be a little bit of a loss for a while, but sometimes patterns take a while to play out. It does have a 50% wave 4, so that could be an upside breakout just as easily and run up to that wave 5 projection. But 120 is the key here. Keep an eye on 120. Let's see once again where it finishes the day, and then what's the breakout. So this one, you need more than just the 1 day and the follow-through day. We need a clear breakout to the upside out of this triangle, and it's got to get above that 50-day moving average. That's the royal blue line on the chart. It's got to get above that first. So, gosh,
Awesome.
really good,
Thanks, Rob.
really good charts to look at. So, okay.
I agree. We always have such well thought out questions and from a very informed subscriber base. So very, very thankful to be a part of it and interact. See, we have 1 minute, probably less than 1 minute now. How about 2 more symbols for this session? We'll call it a day.
All right. Sounds good.
First one's SMCI.
This is the days when AMD was you couldn't have a session without AMD. You remember that years ago? Now we got SMCI in here, and it had a heck of a run, and then it got continued on the news that they're moving into the S&P. It's now trading as of yesterday in the S&P, and I've talked about this before, and I hope nobody was trying to go long here on the fact that now it's in the S&P. Those tend to slow down momentum runs because everybody has to acquire it before the 18th. So if you're following the S&P, then the acquisitions ahead of time. That's why these stocks, when those announcements occur, run ahead of it. And now the requirement is met, so it's going to trade more like the S&P now than with this craziness that occurred because so much of the stock has been acquired now. So I think these wild major upside days are probably coming to an end on SMCI. It could just be more of a normal run. But if you're wondering why is it down today when it's trading in the S&P and the S&P is up, there was a big mass of buying, and we're just short on buyers right now. There's a buyer's strike because everybody had to buy it that was following, that has an ETF or something that mirrors the S&P, and so now we're more on the retail buying side at this point in time, and it's going to probably hover here for a bit. If you're long, you want to see if it can hold above this area here around 800. That's where the wave 4 is. So perhaps we come down and label a wave 4 here soon, and then maybe more of a normal move to the upside. I just don't think you're going to see this crazy vertical stuff out of it anymore. Not now that it's in the S&P. But that's what happens with stocks that get announced there. All right, one more.
You hit that spot on there, Rob. That's exactly what commentary Will was looking for, I believe. And Will says thanks. Let's finish off here with the final symbol. And before I pass it to you, I just want to thank everyone that took the time to attend live. We do greatly appreciate it. And it's always a pleasure, genuinely, to interact with you all. I feel like I have lots of virtual friends out there just from interacting with you all, and a lot of intellectual virtual friends, that is. So we'll finish up with INTC for this session, and I'll pass back over to you to wrap things up afterwards.
So we've had AMD, Intel. Sometimes we get some names that I'm not familiar with, but we've had some of the bigger boys today. So it's always interesting here at TradeFinder to see what kind of symbols the folks are going to come up with. Look, we're at the wave 4 today on the low, right at the 38.2% fib level. It's not my favorite fib level, but it's a fairly strong one. So if we can bounce, this is a good point to mount a bounce from. But 42 was support. We did break below it on the open, but we're already back above it. So the key here is going to be, can we hold 42 into the close, and can we follow that through tomorrow? So for this one, to go back long on Intel, and that would be a place to look. I think they need to play some catch up as well to NVIDIA, et cetera. But it's got to get back above that 50-day moving average. So one thing, can it hold 42 today? Another is, can it follow through tomorrow? And then if you want to go long Intel, wait for it to get back above 44. And if it gets back above 44, then you could have something going. So thanks, everyone, for spending some of your afternoon with us. We do love, or wherever you are, we do love doing these live events during market hours. And we've talked about this a lot today. But once that software's live, it's going to be even cooler to see what's happening while we're talking. So can't wait for that. So enjoy the rest of your afternoon, everybody. Look forward to talking to you again soon. Take care.